reduce your accounts receivable days, right? So what do I mean by that? When you work with companies, you can get money right now. So this might be weird for someone that's maybe in shoes or whatever, e-commerce in general, because you make the money the moment someone buys, like it's instant. They pay first and then you ship the product. So what you can do, even in that businesses, you can reduce your accounts receivable. So I'll give two examples: products that you sell immediately and services. So with products, you would say it's already instant. I get paid and then I deliver the product. What's faster than instant? I can tell you, it's in advance. You can make money in advance. You can say, instead of pay me now for this shoe, you can have the inventory for the shoe, or you know that you'll get the inventory in a week, in a month, whatever. And you can say, hey, we have a sale on the first 100 or 1,000 items of this shoe, and that sale is for whatever, 20% off. The shoe goes live on the 7th of December. Doesn't matter, it's my birthday. It's not my birthday, but I'm just making this stuff up, right? 7th of December it comes out, and that's when the shoe goes live, and you have 1 month to get it. And you can literally you can sell 1,000 shoes 1 month in advance. Let's say the average shoe is whatever, $50. So you make, with the discount, so you make $50,000 1 month in advance of you having to do anything with that shoe. So that $50,000 might pay for 3,000 shoes, right? Like you can literally collect the money now and pay for the manufacturing plant to make you 3,000 shoes. 1,000 of those are already sold. The other 2,000 you'll sell at full price after that. So this is how you reduce accounts receivables in products. In services, obviously, instead of you doing the service and then getting paid later, which they're up to, if you work with companies like Nike and so on and so forth, you might get paid 60 to 90 days after you render the service. Like you might work for Nike for 3 months and not get paid, and then at the end of 3 months get paid for the work that you've done 3 months ago. So this is real, enterprise level contracts, right? Because Nike can't afford to work with anyone and they make the rules, right? However, in most cases you can negotiate. So people will negotiate in their service, like, hey, I want you to do the work now and we pay later. You need to learn to negotiate in your service, in your favor. And so we never do any amount of work before we get paid. First you sign the contract, then you make the payment, and only after you make the payment do I start to delegate people to do your work. I'm not going to do anything. I'm not going to move a muscle. I'm not going to write a single line of code. I'm not going to look into any website. You first pay me, and then after that I start doing the work, right? And so this is what you can do, okay? So that's what we do. That's what we negotiate, and 99% of the time, I want to say 100%, because I can't remember the last time when this didn't happen. Typically, we don't take on clients that don't agree to this pattern. However, some deals are too juicy to leave on the table, and they want net 30 or net 60 or whatever payment terms. And we do that when it's worth millions of dollars, because then you have a guarantee that if the contract is bulletproof, they will pay you. So that's what you can do with accounts receivable. Reduce that as much as you can. And again, you might not even have used the term of accounts receivable and accounts payable. If you haven't, again, you're just playing the game of business. You're not a serious business person yet. You need to understand these terms, look into balance sheets, P&Ls, and so on and so forth. Just like I explained earlier, this video and these videos are long enough as they are. I don't have time to go into explaining what the balance sheet is, explaining what the P&L is, and what the difference between those are. You might find that confusing at the beginning. Look into it until there's no glimmer of confusion in that, right? So now, moving forward into the next one is you should focus on increasing your accounts payable days, right? So how can you collect money quicker is the previous point, and how can you spend money later is this point. So how can we spend money later? For example, you can talk to subscriptions that you have, and you can say, I want this subscription, but I want net 30 payment terms. And they'll say no. We don't want that. You practice negotiation. The first time it probably is not going to work, but practice. They'll say no. Okay, but I do want some payment terms because we have some cash issues, we have whatever. We don't do that. Now you have to like talk to your manager, do something. Again, I'm trying to teach you to practice negotiation, and you might get, at the end of the day, you might get 5 days net payment terms. You didn't get the 30 you wanted, you get 5, and you practiced. They came up with objections, you came up with more reasons why they should give you the net 5 terms or net 30 terms, whatever, and then you're negotiating. If you have people hired, the way we work is someone works for us for a month, and then for that amount of work, we pay them on the 15th of the next month. So as professional services, so understand this. This is how our business works. We sell a service now, we make the money now, right? And let's say it's the 1st of the month, 1st of July. We make the money on the 1st of July. That's where we collect the money. We then work for a full month. On the 1st of August, we get paid again. So we get paid for month 2. So let's say it's $3,000. We're at $6,000 in money collected. The first time we pay for services for our people to have done this work is on day 45, which is on the 15th of August. That's when we pay salaries for last month. So not only did I not spend money the moment I made it, which is very common. I see this in so many businesses. They collect money, let's say for SEO, and then they immediately pay their team so that they're left with whatever it is that they're left with, and then that's how they manage their business. No. No. You collect the money as quickly as you can, and you spend it as late as you can, right? The reason why we can do this is because we're a 12-year-old company. You might not have this negotiating power. You might not have this trust built with people. You might not have this trust built with your audience and so on and so forth to pay you in advance, or people to accept being paid a little bit later and so on. You might not have this negotiating power. However, whether you have or have not the power, you should still practice negotiation, right, of this. So this is how we do it. And so not only do we keep 100% of the $3,000 up until day 45 when we spend the part of it. Let's say we spend 67% of it. We keep 1,000, we spend 2,000. We actually, at the 45-day mark, we don't have $1,000 left in that one account. We have $4,000 left because we spent 2,000 from the first 3, but we already collected another 3,000 in month 2, right? So we are sitting on $4,000 of cash, which will pay for 2 more full months of services. So for the next 2 months, we have a 100% profit margin on that service because it's already paid for, right? The numbers might be a little bit exaggerated. Don't, take me on the 67% or whatever. Every service is different. I don't know the exact numbers because they always change. And you might say, how do you not know your numbers? You're telling us to know the numbers. The only reason I don't know exact numbers is because I have over 100 employees. Every single month, someone negotiates their salary. A client contract changes. So instead of us doing SEO for $3,000, we're doing SEO for $3,500 for 2 extra articles, whatever. It's a constant change. We're constantly negotiating. We're constantly upselling, cross-selling. We're constantly doing something. So that's why the margins always change. I know in general how they are. So I look at that and I check them often. However, this is the flux you should also be in. You should never know the exact number because that might be a little bit too much. You can know it, like, let's say if you just checked it, yes. But for example, for me, I'm filming this on a Saturday, right? This is how I spend my weekends. I create content for you guys. And then during the week, the last time I checked my numbers was yesterday morning, right? So since then, something might have changed. And another contract was negotiated, another, let's say, payment was delayed, and so on and so forth. So we might be even more profitable by the time I check it on Monday, right? So that being said, this is what you figure out with if you're in products, how can you negotiate with your manufacturer? So they send you the product and you pay them after you got the product, for example. Whatever it is, figure it out, start negotiating, right? And the final one, if you do have inventory, this is for companies that have inventory. If you do have it, reduce it to your business. So instead of, let's say you sell trucks, right? Like every truck might be, whatever, $150,000 from Mercedes. You only sell Mercedes trucks, right? The big trucks that you see on the road. So every one truck is 150 grand, and you sell trucks. So instead of having 10 trucks and you're having 1.5 million in inventory, that a dry spell is about to happen, right? Like that August you sell nothing typically. Like you have 4 years of data, and you can only have this data if you measure these numbers that we're talking about today. That's the only way you can know exactly how much you sell every month, every week, and so on and so forth, if you do what we teach you here at level 5, right? So you do this, and then you say, well, I've sold like 50% less for the past 3 or 5 Augusts. Like in 4 years, I've always sold 50% less. So I can delay paying for this inventory, or I can delay purchasing these trucks up until September, or in late August, when I know September they pick back up, right? So that's another delay. So you reduce your inventory based on how your business works, and you can only know how your business works if you have historical data. So that's another reason why it's very important to measure all of these numbers, right? Understanding your numbers.